investors and traders, and welcome to the Midweek Report. I'm AJ Monte, Chief Technical Analyst with Sticky Trades, and the market is about to close. We have a very exciting day today. There you go. We are officially closed, and while the market at one point, and I'm referring to the Dow, was down over 300 points, we rallied right back up, and as a result of that, we've created hammer candles right across the board. Let's get right into the charts. As you can see here, the diamonds jumped right back up from these lows in the afternoon hours and created this long shadow right there. Now, there's a lot going on, more than what you might imagine. Here we have a lower low, lower high, but look at that slight drop in the volume. A drop in volume on the way down is bullish. And with that, we have the CCI still heading up. Stochastic is still heading up. I still have my upside target up there on the diamonds at 340, 340. Not quite sure we're going to hit that this week, but I am still keeping that upside target, mainly because we have a gap above the market up there around 344. So anything can change between now and next Monday, but Thursday and Friday, I'm still thinking we could see a rally with a short-term bounce off of this key support level, which is that green dotted line. And we filled, by the way, we filled that target from way back here. That is where that green line came from on DIA. Now, if we look at IWM, you can see here again, we have a pivot point, higher low, higher high. IWM closed positive where the Dow closed slightly down. I'm still keeping my upside target on IWM at 179.54. We have a CCI down there that's about to cross with a buy signal. I think that will happen tomorrow. The stochastic has already crossed with a buy signal, which is unusual for the stochastic because usually the CCI makes the first move to generate that signal. But that upside target is still in place at 179.54. Moving right along in alphabetical order to the Qs. There is a hammer that is almost a bullish harami. If we had closed a little bit higher today, that would have been a bullish harami. Now keep in mind, we have this fan line to deal with right now. If we get back up above this number 5 fan line for the Qs, I do think we're going to bounce. And as I said last Friday on the weekly market report, once that gap fills, I think we're going right back down below fan line number 5, and then watch out below. I'm extremely bearish to the downside here over the coming months. And while I do think that we could see a 5-day rally at the year-end rally, I'm not counting that as a major bull market coming back anytime soon. I think the pressure is on to the downside. Option traders who have those put spreads on that we've been working for months now, you're probably celebrating as your account is starting to percolate a little bit as the negative delta starts to kick into your positions. But again, I'm still thinking a short-term rally for the rest of this week for the Qs as well. But that fan line is something you have to keep a very close eye on because we're very, very close to hitting sell stops below that number 5 fan line. So moving right along to SPY, you can see here that we have a hammer pattern just like what we saw in the diamonds. We have a very slight drop in the volume, almost unnoticeable right there. But look down below, CCI is heading up, stochastic is heading up, very close to buy signals on both of those oscillators, gap above the market. My upside target for SPY is still at 437.01. Again, anything can change between now and next week, and pay very close attention to my weekly market report that will come out after the close on Friday. Let's move right along to the VIX, and then I'm going to close it up talking about silver. Now, here we have a shooting star, and we saw a shooting star on Monday. I'm keeping my downside target on the VIX at 1570. Look down below. The CCI is almost at a cross here of the 100 mark, which is that red line. That would generate a sell signal. And so my downside target is still in place. That will be a roll reversal support level at 1570. So keep your eye on that. Remember, for the most part, the VIX is inversely related to the S&P, and therefore a downward move in the VIX will result in a higher price move on SPY. Now let's look at SLV. I make this very public. On Monday with our webinar with the members, I told everyone that I would be a buyer right there at that gap fill point. Well, this is an exact duplicate of what happened the last time I bought back into my silver position. I had put a good till cancel buy order to buy at that gap fill at $20.86. Today, the market opened up below my limit buy order. And what happened? I got a better fill. Now, we have an oversold condition on the CCI. Well, that is not pivoting higher. That drop in volume is bullish. We also have a fairly long stretch of red. We have 4 red candles in a row. That's known as a stale red light. We have a gap above the market. And I think we could start moving higher in SLV. So if you're ghosting or following along with my trades, chances are many of you have already bought back into your SLV position and you're parlaying it just like I am. Remember, today is Wednesday. What happens at 6 p.m. Eastern Time? We have the Rapid Fire Stock Analysis webinar for 1 hour. I will be going over at least 50 stocks in 60 minutes. So go to your member page, look at the Zoom link, tune in there, and if you can, get in 15 minutes early. I open up the door at 5:45. You can start putting in your ticker symbols. I will take the first 50 stocks and then start to analyze them one after the next for that full hour. It's going to be action-packed. I love it. It's exhausting, absolutely exhausting for me, but I love every minute of it, and I hope you do too. So until then, I'll talk to you in the next video. So long.